Good evening, everyone. Thank y'all so much for joining us for the Adulting 101 program. This is our first Adulting 101 of the spring semester, and it is all about navigating taxes and tax season. Before we get started and before I introduce our speaker, I just wanted to give y'all a few quick announcements. We are excited to have you all back here for the semester and hope that you will engage with us with our various events throughout the spring. Just wanted to give you all some quick announcements about what's happening in the Center for Student Engagement. We do have DIY Suncatcher kits to pick up in our office. Our office is located in the Student Union on the first floor in 174. So stop on by and grab a Suncatcher kit to with. We also have several events coming up next week that I want to highlight really quickly. We have civics trivia next Tuesday. It will be here in the Student Union in the ballroom, so come check that out. There will also be a Tennessee theater tour led by our director, Ashley Moyer, next Wednesday, so you definitely will not want to miss that. And then on Thursday of next week, we will have speed friending, so hopefully some of y'all were able to come out to that event last semester to meet some people, and this semester will very much be the same, just a great opportunity for y'all to meet some new friends. And then our next Adulting 101 will be on February 4th at 5 o'clock, and it will be all about first aid basics. And please don't forget to download the Vol Life app and download the Student Engagement Guide. That is a great way to find out all things that are happening in our office as well as on campus. And without further ado, I'm going to introduce our speaker tonight. We have Doug Weaver from H&R Block, who will be leading us through a tax seminar. So we're really excited to have Doug, and I will let him take over and take on the show.
Hello, my name is Doug Weaver. Let me get the right screens up here, and hopefully you'll be able to see me in a moment. And back to here. Get the video back on.
That's me. That's a joke.
Okay, Megan, is the screen sharing showing okay? Doesn't look like it.
It is, yes.
I think that amount shows that you took it somewhere.
Oh, wait, okay, so it's this one.
It says shown on return.
Is it?
You should be good to go, Doug.
Is the screen, is the slideshow showing okay? Because I'm not seeing
Yes,
it.
you should be good to go.
Okay, all right. Then, hello everybody, I'm Doug Weaver. I'm a tax preparer with H&R Block. Happy to be with you today. I'm going to pop over into the screen, the slideshow, and let Megan holler at me if something goes wrong. I can see it. All right, we still good?
We are good to go.
Okay, so first slideshow here shows you my background. I'm not going to dwell on the whole thing. The important thing to know, the first few lines there. H&R Block has 6 certification levels. I'm a level 5 because the level 6 is really a little bit more complicated than I've ever wanted to get into, although they may force me to do it before things are over. This is my 20th season doing tax returns for H&R Block over a 30-year period, really. During that time, I've also spent a couple of years as what amounts to an office assistant manager. For 8 years, I was an instructor in tax classes, teaching various tax classes to H&R Block preparers. And I spent 3 years as an office manager. A lot of other experience in financial services, investing, that sorts of thing. So I did a presentation in April of 2020. It's still available through your YouTube channel. Almost all the information on there is still relevant, so I encourage you to go back and take a look at it. I'm going to kind of point out to you tonight, which is the most important. The exceptions to the relevance is I spent some time talking about the first round of economic stimulus payments that came out. That information is kind of dated now. We have a second round out, and I'll talk a little bit specifically about it in a few minutes. At the beginning of the prior presentation, I gave you a slide that I call a conceptual overview of a tax return in 11 steps. Just straight 1 through 11, real short, that kind of gives you an idea of what's really going on a tax return. Not everybody's tax return has every element involved, obviously. But I know that a lot of my clients walk out of here, and hopefully they walk out knowing more about taxes than they did when they first sat down with me. But they still kind of don't have an overall picture of what is going on here. Given that the title of the session for tonight is Navigating Taxes, this kind of thing I think helps you get that big picture to get a better grasp of what's going on. And I follow that with a few slides that go into more depth, if necessary, at each of those 11 steps, but not trying to do everything that could pop up in any of those steps, but focusing just on the kinds of things that college students are more likely to involve in those 11 steps on the process of doing a tax return. And I'm reprinting those in today's session so that you won't have to go look those up if you want to refer to them. The big chunk of last year's presentation, which I'm not reprinting now, was a short introduction to tax breaks. What the heck is a tax break? What's it all about? Two main types, deductions and credits. I explained that a bit. And then I talked about 3 major types of tax breaks, 2 credits, 1 deduction, that apply to education expenses. And now I'm talking here about your tuition expenses to the extent that they exceed any scholarships you've got. Is there any way you can get your tax liability reduced or even get a refund as a result of those? So all of that information is still relevant. It's one place you could start if you want to get a handle on what those major education-related tax breaks are. And then I like to throw in here, take a look at what's in the green outline box there. You're in college, terminology counts. A lot of people come in, call on the phone, when am I going to get my tax return from the IRS? Friend, you're not going to get a tax return from the IRS. The tax return is the document that you fill out to send to the IRS to tell them about your tax liability and refunds and so on. If you're getting money back, it's called a refund. So the IRS might be wondering, where is your tax return? Because they're looking for the document. You're wondering, where is, did I say that right? The tax return, yes. You're wondering, where's the refund? Because that's the part you're concerned with, getting some of that money back if you're entitled to it. Important to keep the tax terminology straight. So here's the 11, I'm tempted to say 11 simple steps, but once you get down into actually doing it, it's not really simple, is it? Start out with income. You get to subtract some of that income from what they call adjustments. Whatever is left over is your adjusted gross income. Second line, take your adjusted gross income, you get to subtract some deductions that you might be entitled to. Anything left over then is called your taxable income. Third line, your taxable income gets multiplied by 1 or more tax rates that you're subject to. We've got a graduated tax system, so there's multiple tax rates that fall into different amounts of income, get taxed at different rates. You do that multiplication, you add on any other kinds of taxes, sometimes penalties, maybe other kinds of taxes like some of that we'll talk about later, self-employment taxes. You get to add those on, you subtract any payments that you've made, and even some things that you haven't really made the payment, but they're calling it a payment, they're giving you credit for it. And what's left is either you owe them some money, balance due, or they owe you some money, a refund, or in rare occasions, nobody owes anything because the net is 0. So to flesh those 11 steps out more, but not too much, just focusing on the ones that are more likely to impact college students. I'll point out these 3 slides, taking them in sequence. You can go back later and review that if you do some screenshots or something, if you need to save that to see what's going on. But as you can see, I'm stepping through the steps 4, 5, 6, 7, 8, 9, 10, and 11. And that gives you a little bit more specifics about where some individual things that you might encounter doing taxes during your college years, where they fit into that big picture. And feel free to ask me questions about any of this as well as any of the new stuff as well when we get to the end and have a minute or two for that. So, as I said in last year's presentation, I talked about the major tax breaks that are college related. The American Opportunity Credit, the Lifetime Learning Credit, and the tuition and fees deductions. They're major in that they tend to have the biggest financial impact on you in terms of getting some refund possibly. So I'm just going to mention tonight 4 minor tax breaks, let's call them. Still related to college types of expenses, just not as directly or not likely to have as much of an impact. If you're in any of those situations, now you'll be aware that there's something out there and you get to do some more research to see how it might affect you. Student loan interest deduction is number 1. Once you get into repayment mode on a student loan, you're making payments. Some of that payment goes to interest, some goes to principal. Up to $2,500 worth of interest can be deducted from your income to reduce your taxable income and therefore reduce your taxes. There's some income limits, so the more wealthy among us would not be able to take advantage of that. Number 2, if you do have some kind of self-employment income, you're probably not going to be able to write off the expenses, the total expenses of going to college. But self-employed people are allowed to deduct the expense of education and training that they need to do to stay on top of or to learn about whatever is involved in doing their job. This is self-employed people as opposed to those that work as employees and get paid on W-2s. So it's quite possible that depending on what kind of a self-employment gig you've got going on, you may be able to write off some portion of some education expenses. Be aware it's out there and again, do some research. The third one might have relevance for parents of college dependents, might have relevance for older students going back to school. If you've got some IRA funds out there, but you're not quite 59 and a half yet, if you take a withdrawal from an IRA, normally you would have to pay an extra 10% penalty on cashing out your retirement account early. But if you use the expenses for what's considered qualified education expenses, or if you use the funds for that, there's a possibility you can avoid that 10% early distribution penalty. So again, that's just kind of an awareness item for you to know that's out there. Do some research if it applies. And then finally, again, more towards the parents, there's some education savings plans that allow people, it doesn't have to be parents, it could be grandparents, any relatives, strangers, whoever, it could be even the taxpayer themselves, making contributions into certain types of education savings plans. You don't get a deduction up front like you might if you contributed into the IRA like we were talking about on line 3 there. But the earnings on that, and so we're talking typically for putting it in for a multiple year period until a child maybe hits college age, for example. The earnings are accumulating without any income tax being charged as the earnings are growing in that account. And then once you start taking money out of that to pay for qualified education expenses, there's no income tax on the amount you took out to pay for those education expenses. So it's a good way for parents or others with savings to put in on an annual basis over a period of time to build up a larger fund that can be used to fund somebody's college education. A couple more comments on the items that were included in the prior presentation, which you can find on YouTube. There is a possibility that someone might get some scholarships and fellowships that end up providing more money than your actual qualified education expenses totaled. And under that circumstance, it's possible that that excess of your free money over your qualified expenses becomes taxable income for you. So don't just think, oh, that's extra money in the pocket and go out spending it before you do a little homework to figure out if any of that's going to become taxable income that you have to report and potentially pay some income tax on. And finally, as I mentioned earlier, the big section of last year's presentation was on the first round of economic stimulus payment. That's pretty much old material now. The amounts have changed for this year, and we'll talk a little bit more about that in a minute. So to get into the new material, I'm going to cover 4 general areas. Here's the outline for it. Number 1, I'm going to talk about some procedural updates for this season. In the business, we call it the 2021 filing season because it's happening in the year 2021, but of course it's filing the 2020 tax returns. And yeah, if that sounds confusing to you, it's confusing to us sometimes, even when you've been doing it for a long time. So normally the first day that the IRS, this is number 1A, first day normally that the IRS starts accepting electronically filed returns is usually sometime in the 3rd week or even 4th week of January. And they have recently announced that they're not going to do it that early this year. It's delayed till February 12th. So that's when they actually start receiving returns and processing them. And we'll talk some more about that. It's important to know the difference between an original return and an amended return, and I'll talk a little bit more about that coming up. And to know which of those can be electronically filed, which ones have to be mailed in, because you always want to e-file if you've got any possibility of doing that. Despite the efforts of the IRS and the Treasury Department and tax preparers and everybody involved 9 months ago, and again in this January, this month, a lot of people that were entitled to get stimulus payments either in the first round back last year or the second round this January aren't going to get them, haven't gotten the first round, maybe haven't gotten the second round. There's a process for that. It's to claim a missed stimulus payment for either round. It's different from the process that was out there last year, so we'll go into a little bit of detail on that. And finally, I want to point out to you that pandemic pending. Instead of coming to somebody like me in a retail tax prep business that you can pay to do your tax return, or going online to one of the sources and doing it yourself, which there's some places you can go online and do it yourself for free. There's some that you can go online and do it for a fee. There's also an in-between way of doing that. At least there has been up until this season, and we'll have to just stay tuned for a few more weeks and see what happens this season because of the pandemic. And that's the free assisted preparation providers. The IRS has allowed and sort of sponsored and provided education for 2 groups that can do returns and will do returns for free again if they're still in business this year. And I'll go into more detail on that. The second group of information is to say just a very few words about international taxpayers, which is to say non-U.S. citizens that have to do United States tax returns. Tell you up front, I'm not a specialist in this. It's pretty complicated. I'm going to point out one particular area that I'm aware of that anybody that's on a student visa and a few of the other visas should be aware of. So we'll talk a few minutes about that, but not a whole lot of detail. In the bottom of this paragraph right here, I'm giving you the contact information for H&R Block's main Knoxville area office. And if you feel like you need to talk to a specialist about international aspects of taxation, give them a call and they will refer you to a specialist, and it will not be me because I'm not one. And then the final 2 subjects to touch on briefly will be a little bit about the tax issues as a result of being self-employed in the gig economy, particular drivers and a few other things too. And then I'm going to mention a few things and show you a few links to resources in case you might be dabbling in cryptocurrency, some of the tax issues involved in that. So here we go. The procedural updates. Tax season go live by the IRS starts on February 12th. Now, if you go online, H&R Block, My Block account, you come into an office, you go do TurboTax software, you go to one of the free file sources that the IRS can refer you to. You can still do a return right now that's going to be electronically filed. If the return's complete, it's going to go out of wherever you prepare it, and it's going to go out to a server. It's going to sit there at the server waiting for the 12th for the IRS to come along and pick that return up. They pick it up, they start processing it after they check to make sure they want to accept it, and they start processing it. The IRS will pull some returns out of every server before the 12th just to test the system and make sure everything is working, right? And if you've already filed one and it's sitting there, you may well have one that gets picked up by the IRS. Depending on the way the alerts are triggered, Block, for example, sets up people for text alerts to let them know when the IRS has picked up their return. Not sure if that triggers it or not, but it's probably not going to be triggered until the IRS actually starts processing the return. So even if they pick it up early, they're just testing the system. They're not going to start processing it yet. You still have to wait till the 12th, but at least you'll be at the head of the line if you've already filed, and compared to somebody that comes in on the 12th and files. Final paragraph there. The normal minimal turnaround time to get your refund, if everything's okay with your tax return, is in the 10 to 14 day range. The IRS says that 90% of the returns, see, I did it again. 90% of the refunds, right, are issued within 21 days. So February 12th, 10, 14, 21 days. We're talking last week of February, end of February, maybe into that first week of March. And that's under normal circumstances, and even this season. But there are two types of refunds that, again, in a normal situation, pre-pandemic, if you had either of those types of refunds, you would have had to wait an extra 3 weeks, basically. If you had any money coming from earned income tax credit, or the additional child tax credit, the IRS makes you wait for an extra 3 weeks. And the reason for that is a tax law change that went into effect in 2016. The reason for that is your W-2s and 1099s that your employers and payers report most of our income on. It doesn't go to the IRS, it goes to the Social Security Administration. They end up picking the Social Security and Medicare contribution information out of it and the earnings information. They digitize that. I'm not answering that. They digitize that and they forward it on to the IRS, and now the IRS has that information to verify your tax return if you have one of these types of refunds. And only after they've verified that you really do have that income will they generate this portion of the tax refund. People that don't have those types may well get their refunds before the IRS has had time to verify their income, and if they fibbed on the income, they may get letters later saying that there's a problem. So by the time refunds actually start rolling out, late February, early March, between now and then, keep your eyes and ears open to see if there's any news about further refunds in the processing due to COVID or any other issues. Some definitions. An original return is one you're filing for the first time. You haven't filed that for that year in the past. It can be current, 2020, like we're about to file now. Or it could be a prior year. Maybe you didn't get around to filing your 2019 return. You file a 2019 return now, it's still an original return. An open prior year return is one that may be past due, but you can still file it and get a refund that you're entitled to. 3 years generally are open once you're into a new current year. So up until the filing deadline this year, which is April 15th, not only is your 2020 the current year, but your open prior years are 2019, 2018, and 2017. A lot of places you couldn't, but now you can file an original 2019, 2018, or 2017 return electronically. So if you're one of those folks that never got around to filing one of those returns and you decided to do it, please don't mail it in. Go somewhere that lets you do it electronically. It'll get processed a whole lot sooner. This year, well, the final definition, an amended return, let's say you file that 2019 return and then another W-2 shows up that you'd forgotten all about. It's just a small amount of money. You even forgotten you'd worked there, but it needs to be reported anyway, right? You can report that to the IRS, especially if it changes your refund, right? And improves your refund. And you do that by filing what they call an amended return. In the past, amended returns had to be mailed. Print them out on paper, mail them into the IRS. 2 to 4 months, if you're lucky, it'll get processed and you'll have that refund show up. Now, a 2019 amended return can even be electronically filed. That's a game changer. It gets to the IRS a whole lot quicker, and hopefully it means it'll get processed more quickly too. Next year, we'll probably have the ability to e-file 18, and the next year maybe 17s, but right now, the only amended returns that you can the only prior amended returns that you can e-file are the 2019. So bottom line, if at all possible, e-file. As of November, I believe the IRS still had a backlog of at least 1 million paper filed returns from back in the early part of the pandemic that they hadn't gotten around to processing. They probably still have a backlog right now. You do not want to have a new or another paper return going into them to get down at the bottom of that stack that they're working through, hopefully, right now. So find out if any return you have to be filing can be electronically filed, and do so if at all possible. So below where I say so please is a summary of what I've just said. You can refer back to that as necessary. Oh, and as of right now, even though the starting of accepting e-filed returns has been shifted by three weeks about to February 12th. As of right now, they still say that the end of the tax filing season, the due date, is still going to be April the 15th. Subject to change? Sure, everything's subject to change, right? So keep your eyes and ears open. If things get worse pandemic-wise, it's quite possible they may extend the season again this year like they did last year, but as of right now, they have not done that. Okay. What do you do if you or someone you know was supposed to have gotten a stimulus payment either in the first round or the second round, and they didn't get it? Even if they didn't get a portion of it. Husband and wife got theirs, they've got a dependent, they didn't get it for the dependent. Somebody didn't get it at all. Whatever. Doesn't matter whether it was the first round or the second round, or even both. 9 months ago, there were a couple of ways to contact the IRS and give them some information that might have picked up the fact that you're out there and deserving of this stimulus, and given them direct deposit info if they didn't already have it, and gotten them to get that out to you later in the year. I think they were still sending some out in October of 2020. That's not relevant anymore. If you've missed either of those rounds of stimulus, the only way to get it is to file a 2020 tax return. There's a couple of questions on the return where, at least when we're doing it, it's basically just 2 blanks to fill in. First is the dollar amount of the stimulus payments that you did receive on the first round. So if you got 1,200, put in 1,200. You might have been supposed to get another 500 for dependent, but you didn't get it. Don't put 500 in there, put the 1,200 that you did get. Another fill in the box with an amount that you got for the second round. If you didn't get any at all in either of those rounds, put in a 0. Don't leave it blank, put in an actual 0. The software, the processing is going to take that into consideration. It's going to look at the details on your tax return, and it's going to determine whether you were entitled to that, and it's going to look at how much you actually received, and any more that you're entitled to receive, you'll get it as part of your refund for 2020. And the reason that this is happening this way is that those stimulus payments, when they were created, were designed to be 2020 tax year tax credits with the money going out to us in advance. Some of it back in early 2020 and the rest in January of this year for the second round. So that's why we can do a 2020 tax return and say, hey, I was supposed to get more money than I actually got. Let me have the rest of the money now. And so do a 2020 tax return. You'll encounter it if you do it yourself online. You'll encounter it if you go through one of the free preparers if they're available. You'll encounter it if you do it through a retail office like the one I work in.
Doug, it looks like a question really quick about stimulus payments. Someone asked if we were claimed as a dependent last year, could we file as an independent this year and receive last year's stimulus payments?
Okay, the first part of the question. If you were a dependent for 2019, but you are no longer a dependent on presumably your parents' return in 2020, yes, you file as whatever your correct filing status is, single, head of household because you're a single person with kids, or married filing a joint return, or even married filing separate. Fill out your tax return based on that information. And so that's the simple part of the answer. The rest of the answer gets a little more complicated, and I have to say I'm not sure exactly how it's going to work out until it starts happening. But technically, if you file a 2020 tax return and you're, let's say, a single filer, no kids, you're entitled to $600. Well, your parents, let's say, to keep the example simple, are filing a 2020 return, and let's say that they got that $500 for you last time. So they're going to say, okay, we got $1,200 for me, for Mr., $1,200 for Mrs., and $500 for a budding college student. So they got $1,200, $2,400, $2,900. So you fill in the box, $2,900. But again, that was an advance, right? And if you end up, the rule appears to be, if you end up having gotten in the past stimulus funds more than what you're actually entitled to get on your 2020 return, they're not making efforts to recover that, which means if it works out the way it's been explained to us, they're not going to go back to your parents and say, hey, give back that $500 for the kid. But now that you're filing a 2020 tax return on your own as a single person, you're entitled to the $600 for yourself, plus any that you may have if you have dependents in the meantime. So that's the way the rules are written. We'll see if it actually works in progress in actual reality that way. Good? Okay.
Yes, thank you.
You're welcome. So the last point I was going to make on this is because the IRS had set up a couple of methods to get information to them starting like 9-10 months ago if you didn't get in on the very first distribution of that first round. But that's not in place anymore, and you have to do a tax return. One of the methods of getting information, well, actually both of the methods of getting information to the IRS last year on those issues was no cost, and it even extended to retail tax preps like us. We could do what was called a non-filer return to sort of get around the fact that normally if you don't have any income and you don't have a refund, we can't go into the next screen that says, here's a bank info for a direct deposit, right? Because you don't have a refund coming. But the IRS allowed us to jigger the software so that it let us get into that. We pretended there was $1. We did a non-filing return. We were allowed to put bank direct deposit info in there if you have one, or if nothing else, just the fact that you're filing the return means you're there. It identifies any dependents you might have. You get your current address there, current phone number, so they know how to contact you if you need to. And we were doing those for free too. That's not the way it gets done this year. This year, it's just a regular 2020 return that has a couple extra questions on it. So we have to charge for those returns. Block has not made a corporate decision to do any of those returns for free. If you're a single, no dependents, you're normal, and all you've got is a W-2, the absolute most simple return, we charge $69 for that, and we're still charging $69 if you come in, even if you don't have income, but you're filing to identify yourself as somebody that's entitled to get a stimulus that you missed, right? $69. If you had a dependent, our normal price would be $139, but on that situation, we're actually giving a $70 discount down to $99. So if you don't have regular income, you're just filing a return through us, retail office, to get some portion of that stimulus that you didn't get when you should have gotten it, and it's going to be coming to you as a refund. 69 single with no kids, 99 married or head of household with dependents. Other preparers may give some discounts, may not, I don't know. I'm not cross-trained in the pricing of the H&R Block online returns that you can do through your My Block account at H&R Block, so I don't know what the pricing is going to be on that. But if any of those free assisted provider places are in business this year, that would be the place for a person in that circumstance to go, but we'll have to stay tuned to see if any of them are available. So once you answer those two questions about how much did you get in those two, and the software calculates how much you're entitled to get, it calculates an amount that you're entitled to get. So let's say you're supposed to get another 600 for a dependent that wasn't picked up from the second round, and there's a line on the tax return that shows that $600 in there. But to get there, especially if you were doing a paper return, they've got a full-page worksheet that kind of goes overboard in this. If you're doing it online, it should be pretty easy. You just fill in 2 blanks, right? If you're doing through us, it's just 2 blanks. But if you really have to get down into the weeds of it to figure out what's going on, and you start looking at this, brace yourself. Here's what the worksheet looks like. I'm going to pretend I can hear everybody groaning over seeing that there's a full-page worksheet just to figure out that you missed 1 or 2 stimulus amounts. But this is kind of the whole situation. This is kind of outlining everything that could be feeding into the decision points about how much you're entitled to get in the case that you might have missed some of it. So again, if you're doing it online, if you're doing it through a pay prepare, it's going to be a whole lot easier than this. You're not going to have to worry about this. Let's hope you don't. All right, so I said already no free fix this time for non-filers. If you come to us, we're going to charge you for it. That's already in there. Couple of links there. Of course, I can't do live links to this, but they're still there for you. That take you to information on irs.gov that talks about the stimulus stuff, stimulus payments, and how to deal with it, and how to recover missed payments. There's the 2 links to the 2 free groups that in the past have done free tax returns for people to just walk in off the street. Several of the Knox County libraries are locations where that was done, several of the churches around town, community action centers in town. And you guys even have one in the law school, I guess the main building for the law school on the Knoxville campus there was one of the locations that I always saw on the list as available.
I'm still confused.
So follow one or the other of those links there a little bit later. Right now, it's not showing any locations at all in Knoxville, in a 50-mile radius of Knoxville, but it's really too early for those to be listed yet. So as we get closer to February 12th, if you want to take advantage of one of these, if they're actually in business this year, check into one or both of those links and see if you can track down one that's close to you. Or just start by figuring out who was doing it at the law school last year and see if they're still doing it. All right, just a few words about international students. Again, I'm not an expert. There's some references right there if you need to get a start on learning about this. If you're going to have to deal with it, or you know somebody is, and they just need to get exposed for the first time, start with some of those links right there. And as I've said, you can always contact HR Block to get some more information. The one thing I do want to mention is, and this I believe is relevant to international students, maybe some teachers and trainees as well. At least the F1 visa and maybe some of these others have a time frame. Any part, second paragraph there, any part of 5 or fewer calendar years, that visa expires, and the expiration of that visa, even though some other visa, or you may just become a citizen or some other kind of residence after that, the expiration of that could be a trigger point for the requirements for you filing a return to have changed. So if you're coming up on that period, figure out when that period is going to be and do your homework ahead of time to figure out what you have to do, what changes you're going to have to do in filing a tax return. That's about the only thing I really know about this subject. So there's that paragraph that I've got in the quotes there is a first paragraph that this source that I have referenced down here started out with. And if you just read that paragraph, you see right away, whoa, this is complicated stuff. That every explanation brings in several more definitions, and you have to go deeper, deeper, deeper into the rabbit hole to figure out what the heck they're talking about. So once again, maybe a good idea to go find somebody that really knows what they're doing already. All right, to mention in passing, self-employment in the gig economy. If you're driving for Lyft, Uber, food delivery, if you're working as a shopper, third paragraph there, you may be doing some other stuff that's a little bit more traditionally self-employed rather than sort of what's known commonly as the gig economy. But the important thing to notice is that if you're doing this, you're no longer an employee, you're not getting a W-2, you're not having income tax withheld, you're not having Social Security tax withheld, you're not having Medicare tax withheld, and you're not getting that form that tells you what all those withholdings are and what to fill in on the blank for your income. You're self-employed now. Self-employed is a whole lot more complicated. For example, if you're self-employed and you come in, that $69 or $139 tax return I was just talking about, self-employed with sort of minimal expenses, add $100 to your prep fee. That gives you an idea of how complicated it gets right away. So you need to know up front, hopefully before you start doing this, but also if you've already started and been doing this, before you actually sit down to try to do a tax return, do some research first so you know what's about to hit you. You probably didn't even get a 1099 miscellaneous like a lot of self-employed people are, because you're getting a different kind of statement from the payer that at least shows how much they paid you. It shows you the fees, hopefully, that you kick back to them for use of their platform, other services they may have provided as part of the gig deals. And they'll provide at least some of the information, as in the case of drivers, for example. They're going to tell you how many miles they have you recorded as driving. But they're giving you the miles that you drove with a fare. You had some getting to the work area that you drive in miles, you had some getting back home miles, and you had maybe some miles driving around to be in the area while you're waiting to get a call that you've got a ride to go pick up. There's possibilities that you get to deduct an expense related to those miles too. So don't just stop with the mileage figures that they've quoted you. You need to be keeping your own mileage records and tracking any additional miles. Couple of different ways to get an expense item for those miles. They're in that second paragraph there with more links down there for you to follow to go to the Schedule C, which is that $100 form that reports your self-employment income if you're coming to my office and paying for that. Do your homework ahead of time and do your documentation all along the way while you're doing that job so that you have all the records. You have all the information you need to fill out the right forms to get the right information to the IRS so that they allow all of your legitimate expenses and they don't come back and say, sorry, you didn't document this adequately. So that $500 of expenses that you thought was going to knock $500 off your taxable income, no, didn't work. You got to pay us the extra tax on that $500. Don't have that.
Doug, we have another question. Someone asked, would an artist who has periodic sales not exceeding $200 need to track those sales and report them as income?
The IRS says yes. If you're, because at this point you're self-employed, there's no payer involved, you're just taking money directly from whoever bought those from you, even if whether it's an individual or say a museum or whoever else you might have sold it to. But you still report all of the earnings that you made. The IRS wants you to report all of the sales that you made. You keep track of your expenses. You offset the earnings with the expenses. If you have a positive net left over, you've got what's called net self-employment income. And that, as well as any other income you've made during the year, all gets added together to figure out if you've got any taxable income. If the net from that self-employment is less than $400 for the year, you don't have to pay with the second type of taxes, which this slide right here is describing to you. The first type of tax is the income tax, second paragraph. The second type of tax is your self-employment taxes, which is your double share, I'm going to say, of Social Security and Medicare taxes that would otherwise be happening on your W-2 if you were an employee. So if you only made $400 or $399 from your art sales for the year, it's countable as taxable income, but it's below that $400 threshold, so you don't have to pay the Social Security and Medicare tax. And that saves you, if you read down to the next last paragraph, those two taxes right there typically amount to about 15% of what your net income is. But over $400, say you make $500, you subtract that 400, now you've got 100 that you have to pay self-employment taxes on, and that 15%, that's going to be, you know, $15. And if you're in the 10% tax bracket, you've got 10% income maybe on that. On the other hand, if this is your only income and you only made $500, $1,000, something like that, if you're filing single, you got a standard deduction of over $12,000. You can make up to a little over $12,000 before any of it's actually income taxable. So you may have a situation where you made more than 400, so you've got to pay self-employment taxes, that 15% on the net, but you don't actually have to pay income taxes on it. It just depends on how much money you got. If you do have a lot of income and you're expecting to owe some taxes on your self-employment, you can wait until tax time, figure out how much it is. If you had other withholding, maybe it's enough to cover it. If you didn't, maybe it's not. You'll have a balance due. You got to pay it to the IRS. If your balance due is less than $1,000, you're not going to have to pay interest on top of that. If it's over $1,000, they're going to charge you a year's worth of interest on that. Interest rate kind of low is about 5% or so. But the other way to get that money set aside from like stashing it in a bank account or under the mattress or wherever, so that it's available to you to pay any tax bill when tax time comes. The IRS is happy for you to make these quarterly estimated tax payments, and there's a way you can do it by mail. You can do it by electronic transfer. The links there take you to the literature at the IRS that explain how all that works and how to set it up if you want to make those payments. And of course, then you keep track of that, and at tax time, instead of filling in that you had withholding from a W-2 job, you fill in that you made, you know, maybe 3 quarterly payments of $200 each. And so now you've got $600 already set aside. The IRS already has that money. You look at your tax liability. If you owe 600 taxes and you've already given them $600, congratulations, break even. You don't owe them anymore. They don't owe you a refund. So those two links will take you to where you can figure out how to do that. Last comment about the gig economy. Airbnb, kind of considered gig economy, but Airbnb or renting out space in your home or renting out a vacation home is really getting into a different kind of tax return. It's called rental income. There's a different Schedule E that's referred to there. The links take you to the places at the IRS that will explain about that. And so at that point, if that's what you're doing, there's tax issues to deal with, but you're not being self-employed anymore. Unless, as part of that Airbnb that you've got rented out, you're providing some personal services. You're doing laundry, you're doing shopping, you're preparing meals, you're driving them around town. If you're doing some personal services in connection with renting that space, now you got both types of activity going on. You've got some rental stuff from the rental, but you've got some personal services, which means you've got self-employment income. And you've got to get back into all that last few slides that we just went through about the self-employment income. So you may well be doing a self-employment income Schedule C, the basic tax return that you're doing, and now you've got a Schedule E, and I can't remember off the top of my head what we charge for a Schedule E, but it's probably somewhere around $75 starting, depending on what's on there. So the alternative to paying somebody like me to do it is to do your homework, learn what you're doing, do it yourself, get it right so you don't get messed up with the IRS, right? Last topic, just some information to throw out there. I'm not going to dwell on it a lot. Some of you may be dabbling in virtual currency, cryptocurrency. Do a lot of homework if you do. In terms of taxation, the important thing that the IRS wants to know about is the fair market value, which is what it was worth in US dollars, right? Since we're in the United States. At the time, you got some benefit out of it compared to the time that you obtained the cryptocurrency in the first place. And if there's a difference there, you may have taxation on the difference. You might use virtual currency in the process of barter. A couple of examples on that, how it affects you on taxes. You might just give somebody some virtual currency instead of giving them fiat currency to purchase goods or purchase services from them. Changes a little bit. We get into the face value again, the fair market value, a couple of examples of how that works right there. And then you might be doing investing as well. You might be buying and trading, buying and holding, eventually selling, hopefully trying to make some money on this. That gets into a different area. Practically speaking, in terms of doing the tax return, it's the same as, let's say you have a Robinhood account and you bought some stocks or some bonds or some mutual funds and you sold them at a loss, or you sold some at a gain, or you did both. They give you a 1099-B, you fill in that information on a fourth paragraph, Form 8949. The results of that carries over to your Schedule D, capital gains and losses. It figures out, did you have a gain or loss? Was it short-term or long-term? Figures out what the tax is on that and reports it. The main difference, if you're investing in crypto, as far as I know, none of these places are actually giving you a 1099-B. I don't know for sure what Robinhood does. So there's places like I've referenced here in the third paragraph, CoinTracker and CoinTracking. That's not an endorsement, it's just for information's sake. That will take all of those transactions that you had wherever your wallet is that's doing the transactions for you, and they'll do all the crunching on it to get it to where it's essentially the same kind of information that you would get from a brokerage company on a 1099-B. And now you've got the information to say, yeah, net overall, I bought $1,000 worth of crypto over the course of the tax year, and I sold for $2,000. Therefore, I have a $1,000 gain, and it was either long-term or short-term, and the tax consequences flow from that. I've had in 3 years, I think now, 2 clients, and that's the only clients in my office that have reported this on their taxes. They used one or the other of these services, and even with the reports that these services give, it's not quite as easy and clear and straightforward as a 1099-B from a brokerage company. So we still had to pour over those things kind of carefully and talk it out between us to make sure we're picking up the right information to get into the 8949 and the Schedule D to report correctly their tax liability, whether it was gains or losses. So do your homework very thoroughly on this situation if you start dealing in any of that. There's your list of links for references to IRS forms that I just mentioned and their info pages on virtual currency. Some links to general references at the IRS and H&R Block's website, which is a great place to go even if you don't use our services or don't have one of our online accounts. There's still an awful lot of information in there that's available to you. And that's it. There's pictures of the labels of 2 of the major tax info sources that the IRS generates. A big one for individuals, and the one on the right there, tax benefits for education. If you decide you don't want to do it yourself, that's what I'm here for. There's my card, and there's plenty of other fine preparers like me at HR Block scattered in different places around town to be happy to do a return for you. Questions?
Check the 2019 notes.
Okay.
And 2019.
Give you all just a few minutes if you do have some questions for Doug. We'll just wrap up with some announcements. Just want to thank you all again for attending, and definitely thank Doug for doing this presentation again for us. He has been a huge help over the past year, giving some great tax information. This has been recorded, and we will add it to the Student Life YouTube channel, so you can go back and rewatch it if you missed something, or if you want to just double check your references for the presentation. As a reminder, we've got some great events coming up in the Center for Student Engagement next week. You can find information about those on calendar.utk.edu or by downloading the Vol Life app and the Student Engagement Guide. You'll definitely want to make sure to have that this semester for all the great things that are happening. So if there are no questions, we will stop record, and hope you all have a wonderful rest of your first week back. We're so happy to have you, and thank you again for coming out tonight.
Courageous you.
Thank you, Megan.
Lot with Captain 99.